Hey everyone, welcome back to the Crypto Code. Is crypto winter confirmed, or are we just watching one of those brutal shakeouts that feels like the end right before the market resets? What does the data usually say in moments like this? Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. It's okay, so when prices drop fast, the internet turns into two camps. It's over and buy everything. Both are usually reacting, not thinking, so we stack evidence. We look for different signals that start pointing the same way. We start with the market's risk temperature. There are risk-adjusted momentum tools, often shown as Sharpe-style indicators on on-chain platforms, that help us spot when upside gets dangerously overheated and when downside becomes so aggressive that selling starts exhausting itself. In plain English, when price rips too fast, setups get fragile. When price dumps hard and those risk metrics cool off, it can mean a lot of weak hands have already been shaken out. That doesn't guarantee a bottom, but it can tilt the odds in our favor. Then we look at long-term structure. The classic guide is the 200-week moving average. Bitcoin has historically spent most of its life above it, and it usually only trades around or below it during extreme fear. So when price tests that zone or briefly dips under it and fights back, we pay attention. Not because it means up only, but because it's the type of level where buyers often start defending value. We also add an exhaustion check like Weekly RSI. When Weekly RSI sinks into historically oversold territory, it tells us selling has been intense and compressed in time. That often leads to either a relief rally or a choppy base where price moves sideways while sentiment heals. Either way, once selling gets that stretched, it becomes harder to keep free falling without at least a pause. And we can't ignore volatility. Real bottoms are rarely quiet, they're messy and emotional. Volatility spikes often line up with forced liquidations and get me out selling. The tricky part is that the low isn't always obvious in real time. Sometimes the market prints a low, then chops around before the next real move shows up. So if these signals can hint at exhaustion, why do some analysts still warn about a long crypto winter? Because there's another layer that has nothing to do with one candle: time. After a major flush, confidence doesn't instantly return. Even if price stops falling, sentiment can stay damaged. That's where winter usually lives. Not always in one dramatic crash, but in the grind, choppy ranges, lower highs, and rallies that keep getting sold. And that's why we avoid the all-or-nothing mindset. We're not trying to call the exact bottom. We scale in, building exposure in pieces instead of betting everything on one entry. If we're right, we're in. If we're early, we still have flexibility. We also prioritize survivability. In chop and fear, weak projects usually keep bleeding, so we focus on assets we believe can make it through volatility, liquidity, real usage, and staying power. And we keep dry powder. If the market delivers another fear spike or another sweep lower, we want options. We don't want to be fully deployed and forced into bad decisions. On the altcoin side, we remember a cycle pattern. Some stronger alts can bottom before Bitcoin does. That doesn't mean every altcoin is safe. Most aren't. It means we stay selective and we don't marry bags. So here's the bottom line. Crypto winter isn't confirmed just because the market had a brutal sell-off. What matters is what happens next. Whether selling pressure keeps exhausting, whether long-term levels get defended, and whether volatility cools down instead of expanding again. When those pieces line up, the risk-reward often improves, even if it still feels horrible. Now we want to hear from you. Are we buying dips, waiting for more confirmation, or staying mostly sidelined? Drop a comment and we'll see you in the next one. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.